Terra's UST, which has plunged 43.6% in just 24 hours after a shaky launch. A crypto bank, Anchor Protocol, has been launched by developers of the Terra ecosystem and allows investors to earn interest on their digital currency deposits by lending them to other borrowers. The Terra USD project offered 20% returns on deposits, which were higher than any returns on conventional dollar bank accounts or stable coins. This has come as a surprise to investors, considering the huge significance of stable coins in the crypto market. If there is a decline in market confidence, it will quickly spread throughout the market. Luna is one of the most popular stable coins, and its rapid price decline is threatening to derail Terra's UST token. Although it is difficult to predict the future of the crypto market, the recent meltdown of Terra's stablecoin has underscored the importance of regulating stablecoins. The Biden administration has pushed Congress to pass legislation regulating the industry just as it regulates banks. Terra USD recovered 90 cents on Wednesday, as Congressman Pat Toomey, the top Republican on the Senate Banking Committee, called for regulation of stablecoins. In South Korea, Do Kwon and Terraform Labs have been subpoenaed. In South Korea, the founders of Terraform Labs are now facing multiple lawsuits. While the company's new stablecoin has a new foundation, its current price is far below its shaky launch day. The company is now distributing the Luna tokens via airdrop to compensate those who held UST and Luna Classic before they collapsed. In the meantime, investors were flooded with information about the problem. While Terra USD has lost nearly $1.6 billion in the past week, the company is trying to save the cryptocurrency. Its founders have said that the crypto community is in a tough spot and that it is up to investors to make the right decisions. While investors are spooked, they can find peace of mind by using USD coin, which is stable to the dollar. As the currency's price dipped below $1, it relied on traders to keep it stable. When it fell below the peg, traders burned their Terra USD to purchase Luna at a low price and convert it into Luna. The Terra USD system is based on the fact that Luna has been designed to act as a shock absorber. However, investors didn't want Luna. Traders have not reacted well to the price drop in Terra USD this week. A new proposal to fork the Luna token has been floated by the CEO of Terraform Labs. This idea demonstrates that the Terra ecosystem is more than just an algorithmic stablecoin UST. The Luna price dropped 18.9% in the news. The new proposal would split the Luna token into two versions, the Luna Classic and Luna Core. While the Luna token has recovered some of its losses, many doubt that the revived Terra blockchain will be able to maintain its performance. It will have to compete with a host of other Layer 1 networks, which underpin cryptocurrencies like Ethereum, Cardano, and Solana. While the company has distributed Luna tokens through airdrops to those who invested in UST and Luna Classic before the crash, investors likely won't come back to the project if they were burned by the previous debacle. However, Vijay Iyer, the head of Luna, has said that there has been a massive loss of confidence in the Terra platform. Several cryptocurrency enthusiasts are cheering the renewed version of Luna. The collapse of Terra's Luna has caused steep sell-offs in cryptocurrency markets, though the new versions already live on the major exchanges. After the initial crash, Terra's algorithmic stablecoin USD had plunged below its dollar peg, which was intended to make it an attractive investment opportunity for investors. Investors rushed to buy USD in fear of a tumble in digital currency prices. The crash of the Terra USD stablecoin has been blamed on central banks aggressively raising interest rates and removing COVID-19 stimulus in an attempt to keep the economy from experiencing deflation. While it is important to note that Terra's Luna token price may rise in the coming days, investors need to pay close attention to it. As a volatile cryptocurrency, this move could wipe out the entire project's value in a matter of days. Several issues have plagued Terra's initial launch, including the failure of its UST product. The company had to put more than half its supply into circulation to avoid a collapse into roused. While this was a disaster, it didn't mean the launch had failed. The UST product was a risky and poorly executed product, and investors are rushing to dump it to gain as much money as they can. The first issue was the fact that the UST token has been priced so low in the first place. The currency was launched in April as a way to combat the problems of the cryptocurrency industry that was plagued by scammers. Its shaky launch, however, was followed by an ICO that was suspended for a week. As a result, it was delayed, but it did reach a high point a week later. The first big event for the new coin was the announcement that the community of Terra and Luna holders would be creating a new blockchain. Several cryptocurrency traders lost $42 billion as a result of the crash. The crash also affected Bitcoin's price. Indeed, it dropped almost a quarter in value between May 9th and May 12th. Another project that has experienced a shaky launch is Waves. They are currently at 40th position in the CoinMarketCap ranking and have lost by $31 per token gold. They have seen wild swings in the cryptocurrency sector, and the Terra USD is outperforming Waves by a large margin. Its launch is in the context of the emerging DeFi industry, and the NFT has been stolen.